Welcome, everybody. My name is Michael Camo. I'm Director of Content for T3 Live, and we are here to figure out what is going on in this market. I'm joined by my good friends, J.R. Romero and Derrick Oldensmith, and we have a special guest with us, Scott Bauer, who is the CEO of Prosper Trading Academy. So how's everybody doing today?
Never better, Michael.
Good for you. Okay, so we want to introduce Scott since Scott is new to our crew. Sami Abusad is on vacation this week. So, Scott, you were a trader with Goldman Sachs. You were a trader on the CBOE. So I imagine you were one of those guys throwing up the hand signals like in trading places and all that?
You know what? That is exactly correct. And most people don't believe that still happens, and it does. So as you can see in the background here, this is actually the S&P 500 pit at the CBOE, which still trades live. There's 150 or so traders in there. That trades live every day, as does the VIX on the CBOE floor and the Russell. So yes, that was me. I started down on the floor of the CBOE back in 1991, and duked it out for a very, very long time trading individual equities and also in the S&P 500 options pit.
Okay, and Scott, and what are you doing today with Prosper Trading?
Sure. So Prosper is an educational firm, and myself, other coaches here, we work with our students live during the markets, and we coach them on how to trade the markets, and we put out live signals. We trade live signals. We explain the thesis, the theory behind, okay, what are we looking at here? What are we expecting this stock to do? What might be the best strategy based on where implied volatility is, time frame, that sort of thing. So we are working with our students live from 8:30 to 3, that's Central Time, every single day. And you know, it's been a great run this year. I mean, we've been doing this at Prosper for almost 15 years now, and it's been a real active year this year.
Okay, all right. So we are going to get into the market fund. So everybody say hi in the comments. If you have any questions, put them in there, and we will get to them today. Okay, so guys, so the big story in September is the move in gold. I know there's at least 2 people on this call that want to take credit for calling it recently. So Derrick, we'll start with you. Is gold a signal for anything else that could be going on in the market?
I don't know who the other person is who would deserve any credit for calling gold out. That was my only conviction call. Oh, we got 2? Well, you weren't on the show last week, so we'll believe you anyway. But yeah,
if somebody had only called it a year ago, I don't know.
I'll show you all the trades that our students have taken in GLD in and out over the last 9 months. Probably been best trade of the year.
Yeah, I very rarely trade the commodities. I rarely trade the commodity ETFs, but that gold wedge, that 4 or 5 month consolidation, whatever it is, that was just beginning to break out of that pattern about a week ago, was looking just so juicy, and it's just perfectly combined with all this other stuff that's going on that would make you want to maybe rotate some money into gold, such as the money in the move in bonds, in the dollar, in the Fed, or the Fed, people losing confidence in the Fed or losing confidence in the independence of the Fed, kind of all hitting at once to make for like a great trade. I mean, my initial target just on the swing is to 350 in GLT. So we're about halfway there on the move that I'm looking for. It's starting to extend a little bit. I'd be surprised if I got a straight vertical move up to 350, but we'll see. So definitely a little bit of a fear trade. The question, I guess that Mike is trying to ask me, though, is does that lead to anything else? Well, one thing to watch is it's a test of Bitcoin. Is Bitcoin really digital gold or not? We're kind of finding out in the situation, and I actually think it's been doing an okay job of trying to be this digital gold. And guys know I've definitely been a Bitcoin hater in the past. Does it lead to anything with the market is really the other question, and I'm not sure. We're going into a seasonally weak period here on the market. I could go on, but we could circle back to my thoughts on the market in a little bit.
Okay, so JR, yes, you and I have talked about gold extensively for at least a year. Do you think gold is sort of isolated to itself, or again, do you think, is it a sign of tension below the surface?
Well, let's zoom out and check out the forest fire from the helicopter. Okay, we had an extremely confusing set of remarks at Jackson Hole from Jerome Powell. It was like I was looking for him to start blinking in Morse code, as if he were some kind of Vietnam War era prisoner. We have unemployment claims of 229,000. That didn't make any sense. Then housing starts surprise to the upside. Okay, we had a real GDP in the second quarter revised to 3.3, and then consumer spending came around, bit everybody in the butt at 1.6%. But we're being told, don't you worry. We're being told, don't you worry. You know, we're cutting 25 basis points and then 150. Okay. All the while, you're seeing a complete inverse correlation between bonds and gold. So they're obviously smacking the bonds, they're rotating into gold. There's some serious combination of concerns, geopolitical concerns about weakening of the U.S. economy. My bigger concern is that we're about to throw gasoline in the fire of a raging undergirding inflation that keeps on rearing its ugly head, while macroeconomic signals still show an economy that is solid and with employment that is not a threat to the economy. So I think that is maybe what is causing that inverse correlation between bonds and gold. I don't need to understand it in order to trade it, right? But that's my opinion.
Okay, Scott, but before I want to get your thoughts on gold, but could you very briefly give us an explanation of how you approach the market? Are you purely a technician, or are you looking at fundamentals? How do you look at things?
Absolutely, on both sides, technical, fundamental, and I'm honestly a real big volatility trader, implied volatility. Not necessarily talking about the VIX. We do take VIX positions, but when I look at a stock, whether it's upcoming for earnings or whatever it might be, obviously we're looking at direction, first of all, and then we're looking at premium levels. Where is implied volatility compared to where it's been historically? And when it's cheap, I buy time. When it's expensive, I sell it. And one of the things about implied volatility is it's always mean reverting, meaning that when it gets way up here, whether it's into earnings season or not, it's going to drop down here. And when it's way down here, it is going to come back up here. So I definitely look at the charts. I definitely look at fundamentals. Most of my trades are typically, shorter term swing trades. I hold them for maybe a week, maybe 2 weeks on the long end of things. I'm not a day trader, but I take all of that into consideration. And ever since my days on the floor, volatility is really my expertise. So that I am really trading spreads, taking advantage of whether it's cheap, expensive, or just kind of average implied volatility.
Okay, and do you have any specific thoughts on the gold trade or the commodities as a whole? Silver's doing well, uranium's doing well. What are you seeing there?
Really, gold is the focus where myself and my students have been, and we trade the GLD ETF because we're not trading on the futures side at all. And it has been, as I have talked about on every TV appearance I've been on for the last 9-12 months, it has been a buy the dip scenario. Every time there's been a dip, it has turned out to be a massively winning trade. At some point, that's going to end, and that trade won't work out. We just exited, and albeit a little bit early, we were in a long GLD position that we got in on the dip from about 2 weeks ago, and we exited last Friday. Unfortunately, we didn't wait through the weekend and get the big pop yesterday and further, continuation today, but we still took 80% out of that trade. So, we're looking to continue that. Now, on this last big run up in GLD here, where is that buy the dip here? Well, you've got a little bit of a gap from a few days ago, which comes in right around 318. That's, $10 lower or so than here. So I would look at something like that, and just based on the trend of buying the dip, that's probably my next entry point.
Okay, all right. I want to kind of get into the market as a whole now, because it does seem like a bit of a grab bag. I mean, to kick off the new month, I mean, biotech is doing really well. Bitcoin is doing well. Gold, we've talked about. The energies and the semis are weak. Long bonds are selling off. We're up to 95% chance of a September rate hike is being priced in right now. So whoever wants to jump in, feel free. Like, does it feel like there's any particular theme right now?
Sure. So, we're entering September, which is a seasonally bearish period here. The biggest thing is that I feel like people are talking about that more than I've ever heard anyone talk about that before as we're coming into September, which always makes me a little bit nervous when everybody is talking about kind of the same thing. But what really matters is always going to be the flow of money, the flow of funds. And we can kind of break that down into a couple different groups to help us understand the potentials, I think, of where this market goes in September after we've had such an incredible rally from April. And when you look at the systematic funds, which is the first thing that I really like to pay attention to, CTA, trend following community, vol control funds, things like that, they're pretty much 100% in the pool. They got nothing left to buy. They're long at the 98th percentile or whatever at this point. So there's a risk to the downside that you could see systematic selling come in September, which we have not seen since the market was moving lower a handful of months ago. But that would only ever happen if we can actually trigger lower to be able to trigger those levels. So one thing I think that traders should keep in mind is that if we were to break down through probably like SPX 6300, that could be something that begins to feed on itself as you start to see the systematic community begin to puke out stock. That's an if-then statement. You have to get there. And you got some other flows that are really cushioning us on the downside right now. One is the SPX gamma level of the market's like $10 billion. So just to remind people what that means is in a 1% down S&P move, you're running into $10 billion of forced buying. So you have to be able to get through that. A lot of that will roll off with September OPEX. And keep in mind the back half of September, the last 2 weeks of September are seasonally the two weakest weeks of the year. And then the other thing is that the long short hedge fund community is not very long and they're pretty short. And that actually gives me some pause. It's very different than what we saw back in February before we failed and really broke lower, where they were long at the 97th percentile. So they're also going to be cushioning downside by covering shorts and buying dips because they don't have a ton of long exposure. So the real question is, can we break down enough to hit the point where the systematic selling comes in? I think that only happens with the catalyst. Maybe that's non-farm payrolls. Maybe that's a CPI number, but maybe those numbers are okay and they don't break down the market either. So my biggest expectation for at least the beginning of September is like kind of choppy weakness, not just a directional straight down move. And we've already started to see that into the end of August through our first couple of days of September here. But I think as you get through that September OPEX period and into the second half of the month, then you'll lose some of that support, and there's a higher probability that we could really break down a little bit further. But one step at a time, pay attention to that low from yesterday. That's our major recent support. It's now held twice. You can look at that with the Qs. You can look at that with the SPYs. If you break through that, then you're starting to break some technical levels. The trend is changing, and you can potentially begin to trigger some of that systematic selling that I was just referencing.
Okay, all right. So, JR, you referenced a bunch of economic statistics before. It makes me think you actually showed up prepared today, which was quite shocking to me. But
I do run a room, just so we're clear.
Because I was like, to see if I was like, what's going on? This ChatGPT in front of him. Okay, so the non-farm payrolls report is hitting Friday. So last month, people got a little freaked out because of those downward revisions. Do you think this Friday's report is particularly important?
I think all labor-related data post-Jackson Hole is important. As far as non-farm payrolls, the consensus print is 75,000, right? Unemployment rate at 4.3%. is the expected consensus print by 10 basis points higher than the prior. So we'll see what happens. I think we're going to get an employment surprise, okay, just based on what we've been seeing in terms of the jobless numbers and the jolts. I think we potentially have a much stronger than expected non-farm payrolls.
All right. Do you think the market will be excited about that?
I think the market's just going to do what it's doing, which is to squirm around. I don't want to repeat everything Derrick said because it just turns into two dudes, one brain, and it's very boring. But your 6360 is the key level you're going to have to watch in the markets. Everyone this morning was wondering, is this a dead cat bounce or is this a FOMO-induced buying opportunity? Probably a little bit of both, if you ask me, in the sense that we're basically we had that shakeout day on the first August 1st, okay. And if you transpose that shakeout day into today, you can almost get a measured move to 6,600. So are we going to be sort of forcefully buying this dip here and then taking out 6,508, pushing higher? Perhaps I go by the 80-20 rule. The most likely outcome here is we form a tight range between 6,360 and 6,508 into the fall. And we probably have a range-bound market for the next 6 to 8 weeks. That would be my thought. That being said, I mean, the opportunities in this market are freaking outrageous every day throughout the day. So not complaining. I'm just saying I'm not sure that we're going to be able to do kind of an ABCD off the August 1st lows into the 6,600 print. Should we show my chart or is this?
We'll get to charts in a little bit. Okay. So Scott, so heading into something like what feels like an important jobs report, do you do anything specific like with your trades, or are there specific things you're looking at, probabilities? How do you approach situations like this?
Yeah, absolutely. On big announcements like jobs report, Fed announcement, those sorts of things, we will look at. Typically, besides individual stocks, we'll look at SPY, Qs, IWM, and I will look for big volatility discrepancies. So going into the print Friday per se, tomorrow I'll really start looking at, okay, is the expected move for Friday, is that volatility that is baked into the marketplace, is that so much more considerably higher than what the vol is next Monday, Tuesday, Wednesday, what it might be? And if it is, I would typically look to put on like a strangle swap, a calendar swap, if you will. So, and in the SPY, for instance, SPY right now is 642-ish or so. And for Friday, the market is pricing in a move of about $6 or so before that. So I would typically look at that tomorrow and look to potentially sell maybe like the 635 put and the 650 call on Friday, capturing that premium, but buying those same strikes Monday, Tuesday of next week. If there's enough of a vol difference, that's how I would play that. I rarely play the big events directionally. So this is more, I don't care which way the market moves. I'm rarely going to play it bullish or bearish.
Okay. All right. I want to take sort of a step back and yeah, we might as well. Let's go straight into politics. So, which is always fun. We'll get to sex and religion later on.
Oh boy.
But what do you guys think overall of the market during the Trump presidency? It feels like, I don't know if there was so much chaos at the beginning that things sort of feel normal now, if that's possible. But Does 2025 feel like an outlier year in any way? And anybody can jump in.
I'll take that real quick off the bat. I feel like it's an outlier year because things that have happened historically have not happened this year. If you sold in May and went away, you got crushed, right? We've seen volatility peak and bottom out more so than we typically do in a regular year. We saw a summer, which is typically very low volume, very low trade, kind of blasé. And I don't know about you guys, but for me, this summer trading was, I would say, one of the tops we've had in a long, long time. So I think it's an outlier because of those reasons. And that's one of the reasons why for September, even though we talked about it and we all know that this historically is the worst month of the year, that's why I, have my reservations about that. And I could see the market defying historical precedents and actually ending September higher.
Yeah, I do think Derrick made a good point in talking about how much people are talking about September being historically bad. I don't think I've ever seen it for any month ever, because do you guys feel like people are just dying to have the metaphorical other shoe to drop and just fall apart?
Yes, I think that's human nature. But I also think for traders and maybe traders maybe a little bit more on the inexperienced side, when you get those sell-offs and you hear people say, well, I'm waiting to buy in, right? I am waiting for this level. And then we get one of those sell-offs like what happened in April or even, just last week. What happens is all of a sudden the palms go back in, right? People get alligator arm. So they get a little bit shaky, a little bit full of fear to actually buy in at some of those levels that they wanted to, and they miss out on that opportunity.
Okay, all right. So Derrick and JR, like Scott said, it's been, an extremely busy summer. I mean, we've seen numbers from Robinhood and Interactive Brokers, Coinbase, SOFI, volumes through the roof. So do you guys feel like 2025 has been an outlier year? Derrick, you're muted.
Hear me now? Can you hear me now?
There you go.
All right. Did we lose Kamo? I just see him as a little spinny icon.
Yeah,
little circle there.
Pandemonium now. It's gonna be insane here with just the children. But to answer his question, has it been a unusual year? I don't know if I necessarily want to characterize it as an unusual year, because every year is a little bit unique in its own sense, and you gotta go with the vibe of the environment that you're dealing with. And that's, I think, a big part about trading success also, by the way, is understanding the type of trading environment that you have and adapting to it. Certainly some environments have more opportunity than others, and that's something that we want to pay attention to as a trader. But I would say this year has not disappointed as far as what Donald Trump is known for, which is mayhem to some degree.
Yes.
In terms of just, you never know when that tweet's going to come out that can rip all your positions in your favor or rip them all against you like all at once. I was there for Trump 1.0, right? I traded that, and it was that way. And Trump 2.0 has been that way, except on meth. So, you just don't know. Still to this day, when he came out with that poster board with the reciprocal tariff numbers that aren't reciprocal and weren't even based on math, that just destroyed the market, I wasn't predicting that. I was long going into that because I thought it was fully priced in by that point. And, next thing you know, I almost was down $1 million in 2 days in the morning because of those long positions going in on that. And then I just added more and was able to trade my way out of it. So it certainly has not been a disappointing environment. There's been tons and tons of opportunity on both sides this year, and I wouldn't let a little slowness that's come in at the index level over the course of the last month dull your senses and think that we're back to normal. I think that we're just getting set up for the next bout of volatility to come in based on, we're going to start cutting interest rates by 3% and balloon inflation. What does that do to the equity market? Does that bring us higher because it's a hedge, or does that bring us lower because everyone loses faith in the United States at that point? I don't know. We'll see.
Okay, JR, I know you've often described this year as a big old party, especially for day trading. So how would you characterize, we're going almost a year in the presidency. How would you describe it?
So it's been a very, we've been swinging between like ecstasy and eschatology, like end of the world type of stuff. And there's a lot of, in terms of the general zeitgeist, there's a big concern that the international order has now been Trumpified and destroyed because of Big Orange Man being mean to the Europeans and the Asians. And there's probably a lot of truth to that, okay? But the American market and economy are much more robust, in my opinion. But yes, there's been the constant fear about the tariff monkey and the real end of the post Bretton Woods international order, both economically and militarily. And I think that's given the market a lot of agitation, a lot to think about, especially with the threat of new economic unions that threaten the strength and dominance of the petrodollar and what that would mean to our treasury market and strength of our currency. So there's been a whole lot of that nonsense. But if you actually stop thinking and start trading in a market like this, I mean, every day is like Disneyland. So, I tell my traders every day, like, turn all that off. A lot of my traders are almost like too smart to be traders. You know what I mean? Like, they think too much. And you just got to look at the damn chart, okay? And you see insane moves. Like, you just see constant opportunity in the market. I never thought I would ever get the chance to buy Nvidia at $89. Never thought that would be a thing that could happen, and it did. I never thought that every day I'd be catching 20+% moves trading equities. So to people who are like bitching, I just say stop complaining. There's tremendous amount of opportunity every day.
Yeah, you just have to be able to adapt. It goes back to what I was saying before about adapting to the environment. And I love what you just said about people being too smart for trading, because that's definitely something I've seen. I remember when I first started my trading desk at T3 in 2013, one of the first 2 hires I ever made was I brought in one guy who just had graduated with a PhD in math. I brought in another guy who had just finished school with a double bachelor's degree in English and theater. And I'll let you guess which one became the better trader.
Easy layup.
Yeah.
I agree with that. I teach my students all the time. You can't outsmart the market. You have to trade in the environment that we are in. And if you start to take opinions that are just based on gut feelings or whatever, you're going to get run over. And you have to be able, Derrick, like you just said, you have to be able to adapt. How we traded a month ago may not be how we trade in 2 weeks. And that's okay. That's okay. So that's one of the primary things that we do here is really guide people and teach people how to adapt, and that, no, you are never going to outsmart the market.
Yeah, I did. I think that's a great point, because everybody should know that there are people out there that make their careers by being the bearish guy, that go on TV and talk about the labor force participation rate or some other random thing.
Oh, they sound super smart. Yeah.
Yeah. I'm not going to name names, but I think everybody can name a few of those people. And I want to give a shout out to Brian S. in the comments. It said, not good to talk politics. And then he immediately followed up with, Trump's still better than dead POTUS last 4 years, LMA. Okay. All right. So might as well make some trouble. Okay. Purely from a trading perspective, again, just trading, would you guys like to have the orange man around for a third term? Just for trading?
I would say for me, doesn't matter who's in office. I'm going to find the opportunity. It's a tough one for trading. I guess for trading, I guess yes. For other reasons, absolutely not. That would be my commentary.
Scott, you might have a future in politics with that answer.
What you mean, taking both sides, riding the fence? No, I think overall the answer would be no. I'm going to make money. I don't care who's sitting in the Oval Office. I'm going to make money.
And
I think Donald Trump's mouth is a volatility machine. It is a treasure trove of fear, greed, insanity, and volatility that never ends. And as a day trader, I love it. I would just keep him on perpetually. I would just keep him on retainer as president.
JR, looks like all the banners and all the buttons and hats are now JR 48.
JR, are you considering running?
What's that?
JR,
I'm just going to say I'm not a crook, and we'll leave it at that.
Okay. Derrick, you're muted. I don't know if you want to weigh in.
I plead the fifth on that question.
All right. Derrick is – it would be rude to call him a coward out loud, so I'm not going to do that. Okay. All right. We're going to close out in a little bit, of course. So, Scott, we sort of have a tradition. Holding on to these 5 shares of Tesla that I'm thinking about selling and rolling into something else. So, of course, I need ideas. So who's got big ideas for me for the time being?
Are you looking for something to make money over the next couple of weeks or hold for 6 months, whatever it is?
The best idea you have in your head, whether it's for the next 15 minutes or the next 15 years.
Something in cybersecurity. CrowdStrike, Zscaler, Palo Alto. That's where I would go.
Makes sense. There are a lot of boogeymen out there. Derrick or JR, you want to step up?
Yeah, I'll share charts.
And if you want to share charts, absolutely feel free. Let us know out in the chat, what stocks do you like? What are you bullish on? Andre saying, yes, theater versus math for profitable trading. I mean, theater, a sense of story might actually be a huge advantage out there.
All right. It's a Chinese company. I like this space breakout through 1294. Called it out Sunday night to our subscribers. Looking for 1650 and then potentially move to 18. Hilton, the hospitality has been powerful along with travel. We have a very nice tight base buy zone at 229. 279.46. I'm looking for a measured move here to 324 and then potentially a peekaboo above 351.57. MFG, this one is a bit of a slow burner. Probably shouldn't say that of a natural gas stock. But this is basically a very tight base, trend continuation. I see this measured move to 108, maybe 112 off the very nice tight coil break. BVN went without us. It was we had it a couple weeks ago. SMA, we got a couple more here for you. I've been waiting. This is an IPO base here. I'm looking for a tight right side consolidation around 37.67. Looking for a move to 45 and 49. Uber, I don't think Uber is done. It's got a bit of a weird inverse correlation with Tesla. They do the cyber taxi stuff. It's buyable right here. I like the dip by around 191.75. It's forming a bit of a late stage cup. And I'm looking for a 115 and 135. WDC, we alerted this 2 weeks ago. I think this is going to 100. And SOFI, I know this looks overextended to a lot of you guys. I think once you take out the 28 and a quarter, the IPO base break, I'm looking for a full measured move to $55.
50 on SOFI?
Yeah.
All right. I own SOFI, so I like that. If you could up it to 60 or 70 next week, it would be much appreciated.
Let me see what I can do.
All right. Thank you. I appreciate it, JR. And that's the type of attitude that will take JR to the top. Okay. Derrick, you have anything you like here? Anything you hate?
Yeah. So first thing is that even though, like I said before, everyone seems to be talking about the seasonal weakness for September, and that makes me a little bit nervous, I actually think that's going to play out despite the fact that everybody's talking about it. So I'm a little bit nervous on new bigger picture longs right now until the market's giving me more confirmation. We had that kind of breakdown on Friday of last week with the Alibaba news that, it was a Friday right before Labor Day. I feel like no one really caught it. But the Alibaba news, I think, was actually really significant for the semiconductor space. So, you saw Nvidia take a hit. You're not seeing the semiconductors look nearly as good right now. So I kind of like, dare I say it, the semiconductor trade to the short side, while I still like the China trade to the long side. I had been long Alibaba. My target was 140. I actually got out of it after hours yesterday when it approached 140. It's just a really big move in a couple of days. I'm keeping it on my radar for it to flag out, something like that, so I can get back involved. So I still like it. And I don't think that these semiconductors look right, and everybody's in them. Everybody owns Nvidia. Like, when everybody owns it, it just gets a little bit trickier. And this chart's not trading as well, since that earnings report. And that could also be one of the things that actually continues the market to grind lower over the course of the next month or two. It probably eventually leads to a great buying opportunity. So if I had to put on like a pairs trade right now, it'd actually be a weird one of like China long versus semiconductors, of Palantir also on the short side to continue to pound that one a little bit lower. But otherwise, we got to wait and see how this market breaks. I look at the SPY, I look at the Qs. Where they're trading right now is very, very neutral. So show me that the market's able to get above the high from Thursday of last week, or show me that the market's able to get below yesterday's low, and that's going to be the direction that I'm going to want to position myself for moving forward.
Okay, all right, yeah, well, I'm going to extend the show for a couple of minutes because Derrick, because you brought up the semis and AI. I remember a couple of weeks ago, Morgan Stanley said Nvidia was the most under-owned mega cap tech stock, which seemed absolute batshit crazy. But the AI trade does seem like it's getting tricky. Nvidia missed on data center revenues. Dell and the other Micron, not great guidance. We have Broadcom coming up. Do you guys, anybody getting the sense AI might need a break here?
It's the only thing holding the market up, in my opinion. And anything that's getting walloped by the tariff trade is already not performing well. It's been AI that has really created this rally. You lose AI, maybe you get rotation. That's the most bullish situation I can think of, is they rotate out of AI into energy stocks, into healthcare stocks, and some value names, and the index holds up a little bit better because of it, or they sell everything all at once when that actual break occurs. So we'll see.
For sure.
And
look at a heat map of the market today.
So
Apple, Google, Tesla.
Yeah, and Apple and Google kind of saved the day here a little bit today, because otherwise I think we'd be much weaker. But just so you know, what'd you say? JP Morgan said that Nvidia is underowned. The research I've seen from Morgan Stanley has said that Nvidia is what they classify as a 9 out of 10 in terms of being heavily owned, basically. So
it's a very crowded trade, obviously.
Yeah, and the funny thing is I talk to so many people in the trading and financial space that are hugely bullish on AI that don't use AI themselves, which seems very, very strange. I do get that sense that not as many people are using AI as some might think. So, Scott, do you have any thoughts?
Yeah,
on this? Go on.
I do. And I think what makes me nervous is that 35% of all the S&P 500 companies are tied to AI in some way, shape, or form. Maybe not as heavy as your Google and Nvidia, but that to me is the big concern here. So, do I think the trade can last longer? Yes. Is it getting long in the tooth? Absolutely. If I was an owner long in that sector, I would absolutely be paring down. I wouldn't exit it. I would definitely be paring down. Maybe that whole sector has a nice little run still, but that weight of 35% of the total S&P 500, and that's not 35% of the number, that's 35% of the companies in the S&P 500, right? So we're talking about, what is that, 180-ish companies. If that, starts to go south, boy, that can carry a lot of weight.
Yeah, Evercore, Julian Emanuel at Evercore was basically saying that the AI components of the S&P 500 are going to take it to 9,000. So if you think it's a crowded trade now,
wow,
just you wait, buddy. We haven't even begun to inflate.
Wow.
Yeah.
All right. Well, let us pray we get more AI then. Okay, everybody. Thank you for joining us, and special thank you to Scott Bauer for coming in and subbing for Sami Abusad. Derrick Oldensmith will be serving a one week suspension, so he won't be with us next week. I'm just kidding. Derrick's going to be traveling, but we will be back next week. Scott, thank you again, and everybody out there, thank you for watching. We appreciate you coming on down.
Thanks so much.
Take care, everybody. Nice meeting you, Scott. Take care, guys.
Likewise.
Likewise.